Does the Fed have a credibility problem?
I think that is an issue. It's worth thinking about this morning after yesterday's Fed hike and a strong sell-off. Whether it's the decision by the Fed, the policy decision by the Fed, guys, or it's whether it's the strong sell-off, is whether it's, I guess, hang on one second, okay? The Fed policy or bad communication, or whether Fed Chairman Jay Powell has lost the trust of the markets here. It could be that there's no convincing markets of the value of anything but a forecast for no rate hikes, and an immediate halt to reducing the balance sheet is the right policy. But it's clear the Fed is failing to convince markets that, first, the outlook is brighter than the market seems to believe. Second, that higher rates are best for the economy in that context. And third, 2 rate hikes are a data-dependent forecast, not a promise.
I think from this point forward, we're going to be letting the data speak to us and inform the outlook and inform our understanding of what would be appropriate policy. So there's a fairly high degree of uncertainty about both the path and the ultimate destination of any further increases.
Powell took pains yesterday to describe that uncertainty, and you can see it in this chart. The number of Fed rate hikes forecast versus what it actually does. It forecast 4 in 2016. Economy ended up weak. It did 1. It forecast 3 in 2017. Economy came in as expected. It did 3. 3 in 18, and then it did 4 because the economy ended up going faster than it had forecast. And then there's the 2 for next year, and we'll see what happens. Another problem the Powell Fed seems to have, setting expectations. Markets clearly went into this meeting expecting a more dovish outcome than it got. Here's a little bit of what the markets seemed to want versus what they got. They wanted 1 or no rate hikes. That was never going to happen. The Fed moved from 3 to 2. The Fed wanted more flexibility on the balance sheet. The Fed has insisted all along it would not really adjust the balance sheet unless it was a real extreme situation. It wanted more concern about the economy. It got a line saying it was monitoring developments and a modest GDP downgrade. And some in the markets had forecast the Fed would remove the language calling for further gradual rate hikes. Instead, that was modified to say some further gradual rate hikes. Not a whole lot there. The inescapable and I think worrisome conclusion here is that the Powell Fed has lost the trust of the market, and it may never have had it. Here's the good news. The Fed lost it before. Remember the taper tantrum in 2013? What did the Fed do? It regrouped, got that trust back, but it was rough sledding then as it is now when markets and the Fed are talking past each other, Sarah.
I would just add one more to your list, Steve, and that was the way he characterized the market volatility that we have seen. A 10% slide during the month of December alone. He said a little bit of volatility shouldn't hurt the economy. And I'm wondering if that was off base.
I guess he could have spoken with more sensitivity, but I think what he's tried to do is to focus on the macroeconomy and suggest that he's not going to be kind of reacting to every change in the market. You know, as I pointed out several times, Sarah, October 3rd, all-time high in the Dow, right? And now a couple months later, we're off 10%. So you tell me what the right indicator of the future was, the market on October 3rd or the market today?
Market today, if you're looking forward, and the trend that it's been going on, especially if you factor in commodities and credit.
Right. No, I understand that, but I'm saying that the market can say one thing one month and another the next month. You're a policymaker. You have to set a policy for the next, essentially, 6 to 12 months when policy takes effect.